They say data is the new oil.
Yeah.
Okay, interesting idea. And if that's true, well, Palantir is trying to build the world's smartest refinery. But the critical question for you today is, can it actually refine its own stock chart into something, bullish? Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into Palantir Technologies, that's ticker PLTR. And this is all based on our research before the market opened on August 26, 2025. So let's set the scene first, the big picture. The market's waking up kind of groggy, maybe a little pessimistic. Futures are pointing lower pretty much across the board.
Yeah, and you've got economists warning about potential recession risks in, nearly a third of the U.S. economy, even with some decent GDP numbers recently.
Exactly. Plus, there's just this fire hose of economic data hitting today. Durable goods, consumer confidence, the works. So expect traders to be pretty jumpy.
Definitely volatile conditions possible.
Okay, so Palantir itself. Let's unpack this company. I mean, it feels like something straight out of a spy thriller, right? Building this super sophisticated software for governments, for big corporations.
A major AI player, no doubt about it.
And Wall Street. They absolutely love it. We're seeing like 85% of analysts slapping buy or strong buy ratings on it. They see a category leader.
They do, but here's the massive conflict, the fascinating part.
What's that?
It's this disconnect. So while the analysts are basically cheering our fundamental valuation models, the ones based on projected free cash flow, projected earning, they're screaming fair value somewhere between $6 and maybe $17 a share.
Wait, 6 to 17?
6 to 17. Compare that to the stock trading around $157 right now.
Wow. That's not a gap, that's a canyon.
It really is. And that frames the question for you, doesn't it? Are you betting on the, let's say, the bullish story, the narrative? Or are you betting on the cold, hard numbers our models are showing?
So, given that huge fundamental difference, what's the wider market thinking? Are people siding with the analyst with a story? Or are they looking at that valuation?
Well, right now it looks like they're leaning towards the story. The options market, for example, it shows this kind of quiet optimism. The put-to-call ratio is 0.96, pretty balanced, maybe slightly bullish leaning.
Okay.
And options traders, they've drawn some pretty clear lines in the sand. You see $160 looking like a potential ceiling, lots of call options stacked up there. And then $150 seems to be the floor they're watching, packed with put options.
Interesting. And what about short sellers? Are they piling in?
Almost non-existent. Big money shorts are like ghosts here. Only about 2.5% of the shares are shorted, so not much pressure coming from that side.
Okay, so fundamentals look stretched, but sentiment, at least in options and short interest, isn't outright bearish. What about the charts, the technical story?
Okay, here's where it gets really interesting, and maybe a bit concerning, frankly.
Yep.
If you connect this to the bigger picture, technically, the long-term upward trend, it's still alive, just long-term still okay.
But zoom in. Look at the short-term picture. It is deteriorating fast. The price has just crashed through some key support levels recently.
Not good.
And volume indicators, they suggest significant money is actually flowing out of the stock.
So selling pressure is picking up?
Seems like it. And momentum. Forget about it. That's gone. It's been replaced by a pretty strong downward pull right now. Volatility has also spiked up, which usually happens after a sharp drop like we've seen. It suggests the ground is pretty shaky.
So it sounds like the technicals are flashing some serious warning signs, even if the long-term trend is technically holding on.
Exactly. It's like the car's engine sounds great, but all the dashboard warning lights just came on.
Okay, so pulling it all together, you've got these super bullish analysts, quiet options, low short interest on one side.
But then this huge fundamental valuation gap and pretty damaged short-term technicals on the other. What does this mean for today's play? What's our outlook?
So, based on everything we've looked at, our call for Palantir today is a bearish outlook.
Bearish. Okay, why specifically?
The why is really that severe disconnect we talked about. You have this beloved AI story, you have these super bullish analysts butting heads directly with what looks like an absurd fundamental valuation and technicals that have soured dramatically.
Right.
That short-term trend, the volume picture, the momentum, they're all flashing red. And look, in this kind of market environment, having a clean, strong technical chart is often essential. Palantir's. It's damaged right now.
Got it. So what's the game plan for someone watching PLTR today? Key levels.
Your game plan today really needs to focus on two numbers. $160 on the upside, that looks like formidable resistance, a tough ceiling to break through.
Okay, $160 resistance.
And $150 on the downside, that's the major support level everyone's watching. If it fails to hold $150, that would strongly suggest, confirm really, that the bears are taking control here.
$150 is the floor to watch.
Yeah.
A break below signals more downside.
That's the key pivot for today, yes.
All right. So in the end, Palantir is, well, brilliant at helping its clients see the future in their data. But the big question for today, for you, is whether Palantir's own future is one the bulls are going to like, especially at this price. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of D-Risk.